The question is, your plan was ever built for the life you're actually going to have?
Yeah, because most retirement strategies, they're built on hope, right? But hope is not our strategy. People, they hope that the market cooperates or life continues on. There are no health issues. They don't need, here's a big one, long-term care. Did you know more than 70% of Americans need some version of long-term care age 65 or older? Think about that. I prepared all my retirement accounts, all my benefits. Oh, crap. I forgot about that nurse bill and that health care bill, right? We're living longer. Guess who needs more long term care than anyone else? It's women. But men are supposed to be the protectors. Welcome to another episode of WealthWise Banking. I'm Jeremy Lee Huggins here with my co-hosts, Jason Patrick Sipple. Welcome, man. How you doing?
I am doing incredible. You just introduced me like I was a WWF star. And so I am ready to rock. That's it. I am ready to rock and roll, brother. Uh, what,
Yeah.
actually, how are you? I don't want to jump right into it. Listeners, we're back. Thank you for being here. We're excited to share this. Jeremy, what's present, bro? What's going on?
Well, no, I appreciate the foreplay a little bit, before we just jump right into the goods here. But man, things are going well. I'm settling in down here in Florida. LB, my little Frenchie, she's getting used to the warmer weather. We're not too far away from Savannah, Georgia, but it is noticeably warmer. So yeah, we're doing well.
And it's going to don't tell LB this, but it's going to keep getting warmer. We're just starting to see the heat right now. So.
Yeah, no, we are. But all right. So now that the foreplay's over, what are we talking about today?
Well, we're talking about something that I think a lot of people actually worry about, and they're worried that am I going to outlive my money, right?
Yeah, this is a big one. This is a huge one for people who especially do all the right things. What I mean by the right things, right? So I'm putting money aside. I'm preparing for retirement. I'm trying to get ahead. I'm trying to make sure that I'm financially taken care of. But now we're looking at, well, that raises a new concern. I'm doing all the right things. Is there enough? Am I doing enough? Am I going to outlive my money?
Yeah, is the mountain I built going to last as long as I live, especially now that the medical field has gotten better, healthcare has gotten better. A lot of us are looking at things more holistically, and we're starting to trust the old system less. And so I think one of the biohackers I followed said that someone, and he thinks it's him, is going to live to 150 years old.
That's
Well,
interesting.
right, if we're planning for a traditional, right, like when our grandparents passed away, whether like mine passed away in their 80s and 90s, right? Well, 150 is double that lifetime. What do you do then?
Yeah. Well, I mean, that's not great. It's great that you live to 150. It's not great that you didn't prepare for it. And if we look at how the mechanics, so let's talk about the math behind it real quick if we can. If we're looking at traditional retirement advice, they say go and build out basically there's a retirement nest egg, and then you'll live on 4% in perpetuity. That's what they want you to do. So
Yeah.
go out and make $1 million and then live off of 4% of that a year. Here's what that doesn't account for: continuing inflation every single year. So you can live off of that 4%, but the very next year, the cost of living goes up and your 4% might not cover all the bills. So now what do they do? Have you heard of the rule of 25, Jason?
I have, but go ahead and let the people know what you're talking. And by the way, that 4%, that's taxable income, so it's not 4%.
Yeah. So depending on what account it is, it could be taxable. The rule of 25 also could be taxable, depending on which accounts that you're drawing out of.
True, true.
Uh, that is going to be your annual income times 25. That's what they're trying to do is basically come up with that number now, right? So what I'm getting at is that the math's always changing. I don't know what the new number is going to be 10 years from now. Maybe it's a rule of 30. Maybe it's a 6%. I don't know. The problem is life changes. And that's the one constant in life that Jason tries to emphasize on every single episode. So I'm going to get ahead of it. You're laughing because you know it's true. But that's what's changing. Life is changing. And to Jason's point, there's biohackers. Healthcare is changing. Medical is helping, right? AI is synthesizing and could potentially cure all cancer here in the next 10 years,
We might
right?
be
So,
living on the moon soon. We might be living on Mars soon, right? Some
right.
people already tell me that I know are already telling me there are already people living on the moon and living on Mars. So, all right, things are changing. Things will keep changing. Things are going fast. AI is involved with tons of stuff, right? Look at everything is changing.
Yeah.
So, what's
And
one thing that you can count on?
is change, and you want to be prepared for that. And what you don't want is to get up there in age and run out of money. So this is a very real concern. It's a great question because we want our members to be thinking ahead. We want them to be thinking long term. And if you start thinking long term long enough, this is the question you'll typically ask yourself. Am I going to outlive my money? Hence why we're talking about it today.
And with that though, this is what I want to point out. Most people, not you guys, but most people are thinking in hours and days and weeks and months. We're not talking about like I'm 51, right? We're not talking about what's going to happen at 90 or 95 or 100. But if we don't think about this now, and when you look at what Jeremy was talking about, all these rules, all this math, all I kept thinking, Jeremy, is BS, BS, BS. Why? Because there's all these variables that weren't even discussed. Do you know how long you're going to live? Do you know what inflation is going to be when you're ready to use that money that you've been socking away, right? Do you know what the market's going to be like if it's tied to the market?
Do you know if Uncle Sam is going to be taxing those retirement accounts or
That was the next
redistributing wealth?
thing. That was the fourth variable. Do you know what Tio Sam's going to sidle back in? His hair is going to be a mess. He's going to be, whoa, partner, you
Mhm.
crushed it. That seed to a harvest. And now I'm going to need 34.5%, bro. You cool?
40%, 50%. The goalposts keep changing. Under the Obama administration, he tried to actually do this, a redistribution of wealth from retirement accounts. Because the America as a whole, we're made of millions and millions of people. There's trillions of dollars in retirement accounts,
Yes.
but not everyone prepared for retirement. So how, with Medicare, with Social Security, with all that likely going away, how do you take care of people who didn't prepare? Well, the government has explored options of a redistribution of wealth from IRS controlled retirement accounts. It's a real concern.
And with that, like what you're talking about there, like they're always going to go find where the money is, and they're always going to make a rule that makes you think that it's for your favor, but it's not. It's for the system again. So if we come back and we look at the old retirement playbook and we go back to 1985, Jeremy, this wasn't in our notes, but if you go back to 1985, 85% of Americans believed in what we're talking about today, and it wasn't even specially engineered, just regular old whole life from a mutually owned dividend paying company.
Mhm.
That's it.
Yeah, that's it. And the
Let's go
reason
back to
here,
what grandpa and grandma used to do, nanny and pop-up. Let's go back to what they used to do. And why? Why, Jeremy?
well, there's the guarantees, right? So there's the guarantees inside of the compounding plus the protection. Like it was a whole life insurance in and of itself. It predates the Irish tax code. So it gets all these cool tax benefits that come inside of it, plus the features and benefits that we know and love. A lot of those features and benefits really come back to control. I control my money. I don't have to worry about a bank taking over the deposits, whether or not the bank is going to make me beg, borrow, piss, bleed, cough, whatever, in order to access my money. It's my money. I have protection for my family. So it's a multifunction asset. It's not just I have guarantees, I have control, but I also have protection. It's not until the stock market and people were trying to like basically put money into higher risk investments did we leave what was guaranteed, what was control, what the safe thing was, and start going after speculation. That was the stock market. We started playing in that the what do they call it? The Wall Street casino is how I've heard it described before.
And again, and we're not saying, hey, don't have any of your money there. If you know what you're doing, cool. Well, we're saying back to the point of what this whole episode's about. We talked about all these variables. We talked about how the systems. We talked about math that don't math. All we're saying now is, well, you're gonna most likely live longer. And if you have a system that you control, one that's built to last as long as you do, the question is no longer do you outlive the plan? The question is whether your plan was ever built for the life you're actually going to have.
Yeah, because most retirement strategies, they're built on hope, right? But hope is not our strategy because
It's not
people
a
will
plan.
hope, yeah, they hope that the market cooperates or like, life continues on. There are no health issues. They don't need, here's a big one, long-term care,
Hmm.
right? Did you know, speaking of that, just side note, let me go down my rabbit hole. More than 70% of Americans need some version of long-term care age 65 or older. Think about that. I prepared all my retirement accounts, all my benefits. Oh, crap. I forgot about that nurse bill and that health care bill, right? We're living longer. Guess who needs more long-term care than anyone else? It's women. But men are supposed to be the protectors.
Hmm.
So, I mean, we can go down that rabbit hole. That's a whole different episode.
I think a whole nother episode, but I love that you're going down a rabbit hole. I don't know if I should feel proud or guilty because I'm usually the rabbit hole guy. I'm usually the tangential guy. The guy just goes off it. Jeremy's like, I don't know what you're talking about. Where'd you go? But this is where we went for a moment because we're talking about real problems that we're all facing. As soon as you said long-term care, I started thinking about my mom, my dad, Patty, myself, because Jeremy, if you didn't notice, I got you by a few years. So I'm starting to think about these things already. So,
Mhm. And most people will eventually pay it out of their retirement accounts. And that kind of circles it right back, right? So
yeah.
reconnecting it, retirement, right? Your hope, your entire retirement strategy should not be built on hope. Like hope is not a plan at the end of the day. I think that's really what I want to emphasize here.
And that's it. And we're talking about how the question, will I outlive my money? If you have that, we're not trying to say, hey, be fearful, be worried, be stressed about it. But just think about some of the questions I asked. And if you answer those questions honestly, you're most likely going to come to the same conclusion. You want something that you control. You want something that you're not going to outlive. You want something that is not tied to an investment. It's not tied to something that's going to fluctuate. You want it to be guaranteed.
Mhm. In terms of investment terms for the savvy folks, right? It is void of market correlations. So it continues to
Hmm.
grow,
That
compound.
sounded smart.
It's not tied, it's not market correlated. So it's non-market correlated growth is what you're really getting at. It's not
Yeah.
tied to the real estate or cryptocurrencies or the stock market. When you engineer whole life insurance the way for living benefits, again, most people they have death insurance, quite frankly. It's life insurance should be used while you're alive. It's a living benefit. When you engineer for living benefits, well, the growth compounds and you have access within 30 days. This is not the Dave Ramsey life insurance where you have to wait 10, 20, 30 years. It's
Life insurance? Are you kidding me?
yeah,
How was that? Was that pretty good?
yeah. Is that your Dave Ramsey
That was my
impression?
Dave Ramsey. I've listened to him like
Got
two
it.
times. He makes me too mad. I turn it off. So,
Yeah, you startled me for a moment. I lost my train of thought. But to continue, I know that was on market correlation. The other thing I was trying to get into was sequence of returns risk,
oh,
because again, we don't know necessarily what hope is going to be, what the retirement is going to be. And if your entire plan is built on the stock market continually going up or the real estate market continuing to appreciate, well, what happens if there's a down market and you're reliant on those retirement accounts? Sequence of returns risk is simply I have to now share or sell more shares of this stock at a lower amount to maintain the same standard of living. But we spoke earlier about inflation going up, right? If we're continue to have inflation at the same time that the market drops, and I have to sell more shares to maintain the same standard of living, well, what risk did that just put to my retirement account? Or could you create guarantees, things that continue to grow, continue to really the policies kind of appreciate, they get better the more they grow, the more mature they are, the stronger they become. So that's why we like to create these non-market correlated assets. At the end of the day, that's what life insurance is. Whole life insurance is just another asset that's devoid of the market and it continues to grow and compound over time when it's engineered appropriately.
yeah, another tool for your tool belt. We're not saying this is the only thing you should do. We're saying that if you want to make sure you don't outlive your money, make sure that you have this sound like Jeremy right now, your non-correlated asset to control, right? Because like Jeremy mentioned earlier, hope is what most retirement strategies are actually built on. Just leave it in there. You're in it for the long haul. You've heard this. Hope the market cooperates. Hope you get out when the market's up, not down. Hope inflation stays calm, right? Hope that there aren't more things and more money printed. Hope you don't need long-term care, which Jeremy mentioned that 71% of us will. And this one's going to sound a little harsh, but hope you die on time. And there was
Mhm.
actually a president of a country in South America, I believe it was Argentina, that literally was saying that people were living too long for the kind of retirement plans they had. You needed more people to die because what they had built didn't take into account that people were living longer, which is what we're talking about.
Yeah. And you know what doesn't expire though, Jason? What actually
What?
continues to grow? It's actually a verb. And we talk about banking, right? The actual function of banking has no retirement strategy, right? Because it's a verb, it's an action in what you do. And so when we engineer this for banking benefits, living benefits, really that's what we're practicing. We're practicing banking. We're just using a non-market correlated asset, whole life insurance
Mm-hmm.
engineered for living benefits, meaning continuously compounding growth from a mutual company. That's important. You get dividends. That is allowing us the function of banking. That's what we get to implement.
Powerfully done. It's a powerful way to make sure you don't outlive your money. It is by having something you control, something that grows guaranteed, and something that protects that future generation, just as a cherry on top, right? So we've went through this. Is there anything else that you want to cover? You've talked about a lot of big words today, Jeremy, but is there anything else that you want to cover with our builders that are listening today?
Well, you can't start planning for the future unless you do something today, right? If you want to
Ooh.
pattern interrupt, you need to actually start taking change, like adequate change in your life. If you're already doing the right things, if you're planning ahead, if this is a concern that you've had, well, take the next step, book the call. Help us create a non-market correlated asset. Help us create something that provides guarantees and protection for your family. That's what Jason and I do on a regular basis. Between thousands of calls, from every income level with all different backgrounds, people who are just getting started and people who have been doing this for a while. We've seen it all. That's the cool thing about it. And you know what? If your plan is already good, we'll tell you that too. So, I
Exactly.
mean, we are here to either validate or to help. At the end of the day, you're going to get something out of a call. Just it's 10 minutes, really. That's how you get started.
Love it, Jeremy. Go to wealthwisebanking.com. Make sure that you are not going to outlive your money if you have that concern. Talk to Jeremy or myself, and we will help answer those questions for you, help you get started if it's appropriate. If not, we will tell you that too. So, as always, we're already in banking.
You're just not the banker yet.
See you next time. Be blessed. Thank you for your time. Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.